Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. Our mission today is to take this vast stack of sources. We've got everything from global finance analysis to on-chain crypto data, and really just extract the vital knowledge you need.
We're looking for the signals and the noise.
Exactly.
And if there's one theme running through all the material you shared, it's contradiction. We're sitting here, it's December 16th, 2025, and if you just look at the crypto market, it screams fear.
It really does. Bitcoin's hovering around, what, $86,000? The whole market cap is stuck near $3 trillion.
And the fear and greed index is flashing deep red. I think it was at 21.
Okay, so let's unpack this paradox right away. Because if the sentiment is fear, you'd expect capital to be fleeing, right?
You would. Retail investors are clearly panicking or just, sitting on the sidelines.
But the material shows the complete opposite for institutional money. We are seeing major inflows even as prices are falling.
And what's fascinating here is that the institutional conviction, it's building the foundational layers of this market, even while the more emotional, high-frequency market is taking a jip.
So the smart money is seeing this as a buying opportunity.
It seems so. They're using the price action to build positions.
Okay, so let's move past the anecdote and get into the actual metrics because they tell a really specific story here.
They really do. In the period that the sources cover, we saw total net ETF inflows of $84.4 million.
So that's a significant amount of conviction capital coming in through, regulated traditional vehicles.
Precisely. And Bitcoin, predictably, it led the charge. It pulled in about $67 million through its ETFs.
That's the default blue chip choice. But this is where it gets really interesting and maybe a little counterintuitive for the average person. The altcoin ETFs, they showed surprising strength.
That's the key takeaway. If you break it down, XRP ETF inflows at $20.2 million were actually higher than Solana's. Yeah, Solana clocked in at $16.06 million. And, Solana's been so hyped, often seen as the main institutional challenger to Ethereum.
And yet, XRP pulled ahead an ETF investment during this dip.
It suggests institutions are either diversifying based on maybe regulatory clarity, or they're just seeing undervalued infrastructure in assets that are outside the current trend cycle.
It's a strong signal that interest is broadening out beyond just Bitcoin.
For sure. Meanwhile, Ethereum, despite its dominance, it's feeling some pressure. We saw notable outflows, specifically $19.3 million flowing out of Ethereum ETFs.
And that lines up with what we're seeing on-chain, right?
It aligns perfectly.
So tell us about that correlation. Ethereum is priced below $3,000 right now. Why would institutions be pulling out, especially when the whole market's consolidating?
It connects directly to trading volume versus price. So Ethereum still has a massive 24-hour trading volume, $27.35 billion. That's more than half of Bitcoin's volume. But when you have that high volume and prices are falling, it means there's huge selling pressure. People are either taking profits or maybe they're converting their ETH into stable coins.
To prepare for other investments or just to reduce exposure?
Exactly. It doesn't mean they're abandoning the network. It just looks like a rotation of capital.
So we've got retail fear driving prices down, but institutional conviction using that dip as an entry point. And that conviction, it's also visible in the digital asset treasury inflows.
Right. We learned that this metric has been climbing for 7 straight days. It's now at $3.41 billion.
And this metric is crucial, isn't it? Because it often reflects business activity.
It does. This suggests corporations, financial firms, they're actively buying crypto, often Bitcoin or stablecoins, for their own balance sheets.
So they aren't just buying paper ETFs. They are securing the actual digital assets directly.
The message for you, the listener, is clear. The underlying infrastructure is being seriously fortified right now.
This quiet confidence we see in the digital asset balance sheets,
Yeah.
it only really makes sense when you zoom way out to the macro context. The sources suggest this crypto money is just a drop in the ocean.
That's the critical link we have to make. The source brings up this huge macro factor that is, well, just not being widely discussed in the mainstream media.
Let's get to the number that just jumps off the page. The source references the official White House website, reporting that under the current administration, the U.S. has received over $9.6 trillion in investment.
9.6 trillion. It's a staggering figure.
Historically so.
And to give some context on the foreign capital part of that, the sources highlight one leader in particular, the United Arab Emirates.
UAE.
They are reportedly leading that foreign investment charge with a commitment of $1.4 trillion.
When you have money moving at that kind of scale, there has to be a mechanism encouraging it. The source offers a really specific explanation for this, connecting it directly to U.S. policy.
Yes, the source attributes this investment and the leverage the U.S. is wielding to attract it to the strategic use of tariffs.
So the claim is that tariffs have been used as a tool to secure foreign capital.
And that this fact actively debunks, some of the common fake news narratives about the negative impact of tariffs.
So what does this massive capital influx, $9.6 trillion, mean for you as a tech investor or someone following AI and blockchain?
I mean, the core implication is about global technological leadership. The source argues this flood of capital is dramatically strengthening the U.S. position as the global center for innovation.
So we're talking about huge funding for AI development, blockchain infrastructure.
And advanced technology, yeah. The U.S. is emerging as a definitive global tech hub, not just for development, but for actual deployment.
And since the current president is noted as being an advocate for both Bitcoin and AI, this economic strength combined with that political backing, it just accelerates everything.
Precisely. This investment drives crypto further into the institutional sphere, which increases confidence, and that speeds up mainstream usage. But more importantly, it funnels capital into critical, expensive infrastructure.
Like secure custody solutions and fintech platforms.
Exactly. The next generation of platforms needed to handle these trillions. This is the background confidence that's supporting those ETF inflows we just talked about.
Okay, so let's drill down into how this massive capital injection impacts specific tech areas we know you care about, starting with what the Sources project is the next big narrative for 2026, tokenization.
Tokenization is projected to be the new narrative, and this is the process of taking traditional financial assets, stocks, bonds, real estate, and representing them digitally as tokens on a blockchain.
It sounds highly technical. What are the tangible real-world benefits that this capital is helping to unlock?
The benefits fundamentally change how capital markets work. The data points to three critical advantages. First, faster settlements.
All right, instead of days, it's almost instant.
Second, fractional ownership. Imagine owning, say, 0.1% of a Manhattan skyscraper. Tokenization makes these illiquid assets accessible to so many more people.
And that leads to the third point, broader market access.
Exactly. It democratizes opportunities that were previously just for the ultra-wealthy.
And this whole movement is reinforced by the regulatory posture. The source points out that the SEC had already authorized tokenization models.
And now this massive investment combined with that clarity is creating a new, more efficient digital financial ecosystem.
And the regulatory support isn't just for assets, it's also for digital cash flow, specifically through stablecoins. And it cites the GENIUS Act.
Right.
What exactly is the GENIUS Act for those who haven't been tracking the legislative side so closely?
The GENIUS Act is a regulatory framework focused specifically on stablecoins. It's about ensuring that dollar-backed stablecoins are transparently reserved and reliably managed.
So it's about building trust.
It's vital. Regulatory support boosts trust and speeds up adoption, making them a viable alternative for instant global payments, large-scale settlements, basically reducing reliance on the slower traditional banking system.
And we know a large part of that $9.6 trillion is connected directly to artificial intelligence. How is this capital really affecting the AI boom?
What's fascinating is how quickly this investment translates into real-world computational power. We're talking about massive funds pouring into data centers, next-gen cloud computing, and crucially, domestic semiconductor fabrication.
So it dramatically increases the sheer horsepower available to developers.
Exactly. The result is just exponential acceleration. You see faster training for large language models, quicker iteration cycles, and rapid deployment of AI across finance, healthcare, manufacturing.
The U.S. is positioning itself as the high-speed testing ground for next-gen AI.
It's an intentional move to ensure its leadership role.
That focus on U.S. leadership is clear, but let's shift from domestic policy to global adoption, because governments worldwide are following suit. I mean, look at Pakistan's really specific large-scale move.
Yeah. Pakistan has signed a memorandum of understanding with Binance to explore tokenizing a huge basket of government assets up to $2 billion worth.
$2 billion. And that includes things like sovereign bonds and T-bills?
Sovereign bonds, T-bills, commodity reserves. This is not some small pilot program. This is a clear strategic move.
It's a huge validation. It's aimed at boosting liquidity and transparency, attracting a new class of global investors. We also noted that Binance and HTX already got initial clearance for local subsidies there.
Right, and this government-level adoption is happening alongside critical industry consolidation, which makes institutional access even smoother. Take the acquisition by Anchorage Digital.
They acquired Securitize for Advisors, SFA.
Right, to strengthen their crypto wealth management platform specifically for registered investment advisors, or RIAs.
So why is that combination, a regulated custody platform like Anchorage and the SFA tech, such a big deal for traditional financial advisors?
It solves the institutional hurdle of fragmentation. This acquisition accelerates the foundation of digital assets in wealth management because it unifies three things: trading, secure regulated custody, and the client interface.
So it makes it far easier and less risky for, your local financial planner to offer crypto to their clients.
Exactly. It lets them do it without the technical headache, and it allows Securitize to now focus almost exclusively on tokenizing real-world assets. It's all about scaling quickly.
Now, if we connect this institutional movement to the bigger picture, the MENA region, especially the UAE, is acting as a real engine for this, as shown by that $1.4 trillion investment commitment we mentioned.
Absolutely. We have two key developments that shine a spotlight on the Middle East's push into Web3 and AI. First, the Avalanche Foundation established a digital token foundation in the Abu Dhabi global market, or ADGM.
And that's going to be their main regional base for growth in the Middle East and North Africa.
And the regulatory environment there is key. The ADGM is recognized as having one of the world's strongest Web3 regulatory frameworks. They call it the DT framework.
This gives Avalanche a centralized, transparent hub.
And massive regulatory certainty, which is something institutions absolutely demand.
That's a strong signal on the protocol side. But over in Dubai, the convergence is happening in a very surprising sector: luxury hospitality.
Yes, at the Palazzo Versace, they launched the first fully integrated AI guest system developed with a company called Quantum Neuron.
And they named her Laura.
And they specifically describe her not as a chatbot, but as a fully autonomous digital human. This is a big step beyond just basic customer service.
A digital human handling guests at a luxury hotel. I mean, what is Laura actually capable of doing?
She handles guest communication across multiple channels, providing real-time support before, during, and after the stay. And crucially, she adapts to multiple languages and cultural preferences instantly.
But it's broader than that, right? She also automates internal hotel operations.
Yeah, coordinating complex departments like housekeeping and food and beverage using predictive, data-driven logic. It's a new standard for AI in a very high-touch, sensitive environment.
Okay, let's loop back to the domestic political scene, which is always a catalyst for market volatility. The source provided a fascinating update concerning privacy advocates.
The source noted that President Trump is openly considering pardoning Keon Rodriguez.
The co-founder of Samourai Wallet.
That's right, after being questioned by a journalist following a recent speech.
And the context here is key. This action would follow what the source describes as penalties and discrimination faced by other privacy advocates, like those with Tornado Cash under the previous administration.
So regardless of your politics, the signal is a potential shift, a change in approach to supporting self-sovereign identity and digital privacy rights.
Now, finally, we have to address the warnings the sources attached to two key pieces of U.S. economic data due this week.
Major volatility expected. Today, December 16th, we get labor market data, and then on the 18th, we have the CPI inflation data.
And the sources have a sharp warning about negative market reactions. They suggest the labor data might look weaker than expected.
Right, but their interpretation is that this may be due to the intentional downsizing of federal employees, a policy action the source views through a specific favorable lens, not some underlying economic weakness.
And the caution is that the media may misrepresent the rationale, causing turbulence.
This brings up the question of data integrity. The source references past allegations of intentional job count manipulation around 900,000 jobs under the previous administration.
So the warning to you, the listener, is to expect volatility, because the market often reacts to misleading news cycles, not the underlying facts.
It's vital we report that impartially. Just be cautious of the spin. However, the outlook for inflation due Wednesday is reportedly more positive.
Research suggests inflation is expected to slow down.
And that expectation, combined with Chair Powell having already reduced the interest rate on the 10th, could provide a strong tailwind for Bitcoin and crypto.
If the facts about slowing inflation manage to cut through the noise of the labor market data.
Exactly.
So we just take a breath and step back. What have we definitively learned today? The market is fundamentally stronger than the price action suggests. It's being fueled by institutional inflows, XRP conviction, and these quiet balance sheet acquisitions.
We've established that a massive, reported $9.6 trillion foreign investment surge is pouring into the U.S., driving leadership in AI, advanced manufacturing, and, crucially, tokenization.
And this isn't just a U.S. story. Governments worldwide, from Pakistan tokenizing $2 billion in assets to the UAE building major Web3 regulatory hubs, are actively integrating these frameworks.
Institutional adoption isn't coming. It's already here, just hidden behind a thin veil of market FUD.
And that leads us to the final provocative thought from the source, building on the success they attributed to tariffs.
What if the Trump administration allows tariffs to be played in cryptocurrencies in the near future? The source suggests this would be an absolute game changer.
So consider this. What specific impact, positive or negative, would a tariff system applied to decentralized assets have on the global crypto landscape? And which protocols or jurisdictions would be best positioned to handle that new kind of regulatory friction?
Something profound to mull over as institutional capital continues its quiet deep dive.